Start your day with It's the Business. Here's Phil Dobbie.
Well, the UK borders are still open, the papers claim today, even from South Africa, letting in people who might have that strain of the virus that the AstraZeneca vaccine won't stop. Okay, it might stop you getting killed, but it won't stop you getting it and spreading it. So should we be worried? Could it delay the UK's economic recovery? Does Matt Hancock have it all in hand? I know that's quite a roaring assumption, isn't it? Plus, Elon Musk getting into Bitcoin in a big way. What is it with Bitcoin?
And now Tesla also in their announcement said you can buy Tesla cars with Bitcoin. So now this is the beginning of Bitcoin as medium of exchange. And then in countries like Nigeria, where up to 30% of the country is already what we call hyper-Bitcoinization, it's becoming a unit of account. People think in Bitcoin. Everything is priced in Bitcoin. When you go to the grocery store, the prices are in Bitcoin and you pay in Bitcoin.
Although the Nigerian central bank has just banned trading in Bitcoin. Teething problems, perhaps. Will Elon Musk give it more credibility? Will it replace the US dollar as the world's reserve currency? That's one of the questions I put to Max Keiser later on, a bigger Bitcoin fan you will never find. It's Tuesday, the 9th of February, 2021. Good morning.
And now, it's the business, making sense of it all with Phil Dobbie.
Yes, an interesting discussion on Bitcoin coming up fairly shortly on the podcast this morning. But the front page of the newspapers, as you might imagine, and this is a bit of a worry, isn't it? It's all about the AstraZeneca vaccine in the papers today, and the efficacy of the vaccine in dealing with the virus from South Africa, the strain that we're seeing from South Africa. This is, of course, the reason why we are supposedly going to have mandatory hotel quarantine for people coming from South Africa, because there was research that showed in South Africa it's a small sample size, but they have stopped using the AstraZeneca vaccine because their survey has shown it only has 10% efficacy against the South African strain. So if we have that coming into this country, we've got a problem. We've all vaccinated ourselves for very little reason whatsoever. The Daily Express this morning, their headline, disgrace, no border virus checks. Thousands arriving from variant-hit South Africa walk out of the airport unchecked. So that is a concern. The headline on the FT, Johnson puts faith in AstraZeneca jab after South Africa halts the rollout. And this is the reassurance, if you can call it that word, from Matt Hancock yesterday when he gave the COVID-19 briefing.
The evidence is that the existing vaccines have some effect against new variants, particularly preventing serious illness and mortality.
That doesn't sound that encouraging, does it? The word some effect. It's going to have some effect. So it's not going to kill you, but you can still get it. It sounds like it's, in fact, it's how likely is it that you will get it if we all go back to life as normal? Maybe it won't kill you, you'll just get ill, and maybe that's a good thing. But, we are racing ahead with this idea of a hotel quarantine in 6 days to try and prevent the spread of this thing. Unless, of course, someone manages to cheat the hotel quarantine, because it's only from certain countries. Imagine if someone tried to cheat the system by transiting through another airport. But people wouldn't be so cunning, would they? Surely not. But we were told yesterday there are only 147 cases of the South African strain. That's why we shouldn't be too worried. It's not the most predominant strain here, but it is in South Africa. And there were only 2 cases of it just before Christmas. And we were told, remember, that this one can spread much more easily than previous strains, maybe 50% more than previous strains. So this has got to be a bit of a concern, hasn't it? If you're thinking life is going to return to normal by summer, it's looking more likely that South Africa's version of this virus will become much more common here. And we'll have a vaccine that isn't going to stop you getting sick. Does that cheer you up? If that doesn't cheer you up, what about the front page of the Times this morning, which says, growing risk of attacks as world order crumbles. Jesus. Defense Secretary highlights danger from chemical and biological weapons, because Ben Wallace has said there's a breakdown of world order as states ignore long-established international rules. In short, we're all doomed. It's a bit of a cheery start, isn't it, to your Tuesday morning? This is perhaps a bit more cheery. The Daily Star this morning. Where's Will? A picture of lots of people in red and white striped tops, like Wally in the Where's Wally cartoons. These are various politicians that are depicted in this, but no Willie, no Gavin Williamson. Missing in action, they say. He's one of the worst education secretaries ever. but we can't help thinking someone is keeping Gav Thicko Williamson locked in an attic, says the Star. Whoever it is, who can blame them? In other news, Lorna Jane, who make women's gymwear in Australia, has been fined for claiming their clothes will protect you against the lurgy. They've been slapped with a $50,000 fine because they say their leggings have been sprayed with an antivirus substance called LJ Shield, which, even if it were true, would only stop COVID-19 being transmitted through your legs. And I don't think that's happening too much. And in that deja vu moment, I'm sure you've had one of those before. I'm sure I have. There's increasing pressure for Sir Philip Green to stump up cash for pensions for those people who've been left out of work after the administrators have flogged off Dorothy Perkins and Burton to Boohoo, who bought the chains, but they don't want the stores. It's so 2019, isn't it, to go shopping in a high street. They just want people to shop online at Boohoo. So no more Dorothy Perkins or Burton stores. Close to 2,500 people are going to be out of work because of that. Remember back in 2016, this is that deja vu moment when we were having the same discussion about sacked BHS workers, because you remember Philip Green was accused of asset stripping the business before he sold it. And then when the company was sold and subsequently collapsed, the 360 million in pension liabilities were left there, and everyone was looking at Philip Green standing on his rather nice yacht in the Mediterranean, which was worth about 100 million, I should say. He did pay that back in the end. After much toing and throwing, he paid 360 in cash in a settlement with the pensions regulator. So will the same happen again? Because nobody's buying those stores at Dorothy Perkins and Burton's, so there's going to be a lot of people out of work. So is there going to be enough pension money? Well, there's not going to be. Is the administrator going to take any money out of those funds to give to staff in pensions? Probably not. So there we are. It's going to be amazing, the high street. When we eventually do go back there, there's going to be lots of gaps, aren't there? Just from the Arcadia group. I mean, Topshop, Miss Selfridge, and then, Dorothy Perkins. There's going to be a lot of empty stores on the high street when we eventually do go back. Meanwhile, we are not spending that much. Consumer spending fell over 16% in January compared to last January. According to people using Barclaycard, the same method which tracks almost half of all credit and debit card transactions, fell only 1.9% in the November lockdown. But January, 16.3%, which is not far off the 19% fall that we saw in April when we had a proper lockdown. I mean, now, quite a few stores are still open, like garden centres, essential services, because you've got to look after your petunias. Garden centres are open, and of course there's many more people going to work as well. Not everyone is in lockdown. According to the Google Mobility Index, because as you know, Google watches your every move, they reckon our visits to workplaces are 48% down right now compared to before the lockdown, and compared to the first lockdown when it was about 70% down. So more of us are going to work, but we're not spending the money. So you'd think that would mean more people are saving. So those who aren't digging into their savings to survive are saving more money. So will that mean that they have more money to spend when we eventually come out of all of this thing? I think, that's what a lot of people are hoping. Now, there's something about Brexit that how could we have foreseen this? We talked about yesterday, the question, what benefits has Brexit brought to us? And what a quagmire the whole thing is. Just how many problems is it creating? Well, performing artists from the UK, they need visas to work in the EU. Who would have thought that when we were going down the Brexit road? And it's an export industry that is far bigger than fisheries, and it's being held back by the need for complex visa requirements. As we knew this would happen when we were no longer part of the EU. A survey of 15,000 performing artists for the Petitions Committee, which looked into this yesterday, found that 81% of respondents said they were very likely to stop touring Europe as a result of the Brexit changes. 79% of them were worried about the future of their career, and 60% were considering changing their career. This is Labour MP Harriet Harman at the Petitions Committee yesterday.
This is not a COVID problem, though COVID has made things immeasurably worse, and it's not a Brexit teething problem either. It'll be enduring unless it's sorted out. Those musicians just starting out will be unable to do the tours they have to get their careers off the ground. Many at the pinnacle of their careers will feel that they have no option but to base themselves abroad, which will be a terrible loss to this country. And many of those who currently make a great contribution to music will find that it's no longer viable for them, and they'll give up and change career.
So as John Danzig was saying yesterday on the podcast, we've got all of these problems that have been created by Brexit. What were the benefits again? We've stopped a few people coming into the country, and we're going to decide that we need them after all because we don't want to go and work the fields ourselves or work in the restaurants or do all the other low-paid jobs. You know the temporary visas to fill all those vacancies are going to be just around the corner. This is It's the Business.
It's the Business with Phil Dobbie.
Making sense of it all.
Now, have you ever dabbled in Bitcoin? If you put $10,000 into it at the start of the pandemic, you'd have $80,000 now. There again, if you spent $80,000 on it in early January and sold it, fearing it was going all the way down in late January, you'd have lost $20,000. So it is pretty volatile, I have to say. And I'm not really sure I get the point of it, except for the fact that it has something to do with scarcity, and therefore that can demand a price, particularly at a time when money isn't scarce, when governments and banks are creating more of it than ever before. Then along comes Elon Musk, who a week ago had said he thought Bitcoin was a good thing on a podcast somewhere, and the price of Bitcoin shot up. Now his company Tesla, it's a bit of spare cash lying around on the balance sheet, so invested $1.5 billion in Bitcoin. Max Keiser has been talking about Bitcoin for some time now on RT, on the Keiser Report, and he's been an early advocate of it. So, I mean, if you've been an early advocate, Max, on that basis, you must be loaded by now. So you're going to cash it all in?
Nope, I'm not. I'm going to hold on to it now because there's a huge price appreciation still yet to come. I'm looking for Bitcoin to hit $220,000 per coin in 2021. And on the subject of volatility, I think the way I see it is that with Bitcoin, it's volatile and you're guaranteed to increase your purchasing power. With fiat money, it's not volatile, but you're guaranteed to lose your purchasing power. So I'd rather have a guaranteed rise in purchasing power and accept the volatility as part of the deal than have my purchasing power guaranteed absolutely to lose purchasing power over time. All fiat money has lost over the past 300 years. Every single experiment has lost over 99% of its purchasing power. Very few have even survived.
But if you're saying that it is always going to go up, well, I mean, the moment everyone realizes that, then everyone's going to pile into it. It's going to become a self-fulfilling prophecy. And that is exactly how bubbles are formed.
The only bubble is fiat money. For example, in the United States, the U.S. bond market is at a 240-year high.
Yeah, crazy.
In Great Britain, the gilt market is at an over 300-year high. Gilts have never been this high in 300 years. Those are in an incredible bubble. Fiat money is in a bubble. Stocks are in a bubble. Bitcoin is the pin that pops the bubble.
So is it because, as I said, it's a scarce resource? So fiat money is not a scarce resource because at times like this, when we need it, we just produce more of it. And the idea of Bitcoin is, I mean, it becomes a bit of a gold substitute, doesn't it? In that case, that there's a limited quantity of it, and that's how it holds its value. Is that what you're saying?
It's absolutely scarce, unlike gold. So gold inflation is about 2% a year. And Bitcoin is absolutely scarce. There's only going to be 21 million ever in existence. And it's a lot better than gold. It's a lot more portable. It's more divisible. It's harder money in that it's scarcer than gold. And it is certainly suited for the electronic age a lot more than gold is. Gold is very expensive. You got to transport it. You've got to insure it.
Yeah.
You got a negative cost with gold of at least 5-6%. With Bitcoin, I can move, let's say I asked the dealer last week to move $1 billion worth of gold from one country to another costs about, you're going to pay maybe $100,000 to $150,000 to move $1 billion worth of gold from one country to another. So Bitcoin, the cost of moving $1 billion of Bitcoin is $2.50.
Right, there's no ongoing cost, though, isn't there, of maintaining Bitcoin? I mean, it's using electricity around the world because it's an electronic kind of currency, so that's an ongoing cost. But I sort of take your point. But look, let's get back to the volatility just for a second. So Elon Musk says something nice about it, and the value shoots up. I mean, that doesn't spell security to me. That sounds like almost a teenager who's craving acceptance. And we know how volatile teenagers are. Please say something nice about me, and I'll get excited. I mean, isn't that what's happening when Elon Musk sends out a tweet and everyone says, "Oh yes, we must buy some."
Well, Bitcoin's been moving up on average 200% a year for 10 years. Before Elon Musk, it was already moving, it's already appreciating on average 200% a year. It's a new asset class. So there's $100 trillion worth of investable assets around the world in stocks and bonds. Less than 1% is in Bitcoin. As that move gets to 10, 15, 20%, then the valuation of Bitcoin will move to 5, 10, 15 trillion dollars.
But has any asset class ever maintained that? I mean, that sounds crazy to assume that 200% is going to maintain itself year on year, because everyone would just move off every other asset class into that one, wouldn't they?
That's exactly what's happening. People are dumping gold and buying Bitcoin, and that's proven out by the data we're getting from people who are gold dealers and ETF dealers and Bitcoin dealers. People are dumping their gold, they're buying Bitcoin. They're certainly dumping fiat money and buying Bitcoin. So people are moving out of fiat money for obvious reasons. It's going to go to zero. They always have. People are dumping gold because it's not as hard as Bitcoin. And so the valuation goes from 600 to 700 billion in total to I'm predicting 2021, the Bitcoin will have a valuation of about $4 trillion, which is getting to around half the valuation of gold. It will usurp gold, and the valuation will be in excess of gold. So you're talking 10, 11, 12 trillion dollars here in the next 3 to 4 years.
Max, you sound like someone to me who's got a lot of Bitcoin, who's talking up Bitcoin, so everyone jumps on board, so it pushes the value up even more for you, so you have a much healthier retirement.
Well, I am trying to explain to folks the value proposition of Bitcoin and why it is better than fiat money, and it's provably better than fiat money, and that's just a statement of fact. So it has nothing to do with my portfolio. Right. I'm saying 2 plus 2 equals 4. Phil. I'm also saying here's the provable, demonstrable way. It's better than gold. Okay, I use mathematics all day long. It doesn't mean I have a vested interest in mathematics. Right. 2 plus 2 equals 4, Phil.
Okay, well, let's look at
gold.
Okay, let's look at some numbers then, because the Tesla share price has gone from $86 at the start of last year to $850 this year. So it's got a market cap of $822 billion, which for a company that's only just started making a profit, made a profit of $721 million last year. That does seem a little overvalued, doesn't it? And now in that balance sheet, you've got a large quantity of Bitcoin that's just been added to it all. And some people would say Bitcoin is also overvalued, or at least it's a risk. So you have a risk within a risk. You've got a bubble within a bubble, potentially. I'd be worried. But from what you're saying, it's all good news. In fact, the picture you're painting is that Tesla might make so much money out of all of this. It's a sort of making cars might just be a sideline for them.
Tesla's not the first company to do this. MicroStrategy was the first person to do it. And then before that, Paul Tudor Jones, famous hedge fund manager in Connecticut, the United States, was talking about Bitcoin and putting it in his portfolio. So it's jumped to the institutional level, the hedge fund level, corporate balance sheet level. We have endowments in America. Harvard, Yale, and Princeton are all buying Bitcoin. And now I understand that sovereign wealth funds like Norway and Qatar are going to start buying Bitcoin. And we have a couple of countries like Iran, Kazakhstan, and a few others are buying and mining Bitcoin as a way to get out of the U.S. dollar, because the U.S. dollar has been politicized. The U.S. dollar is used to censor transactions around the world and to promote the interest of the United States. And so these countries are saying, hey, wait a minute, we don't need the U.S. dollar anymore. We can just transact in Bitcoin. So they're starting to hoard Bitcoin. So
what we're starting to see, in fact, is Bitcoin not just being something, you used the word hoard. But, I mean, the idea with Tesla is also that, you might be able to buy cars with it. So all of a sudden it becomes a proper currency, one that actually you buy stuff with rather than just hoarding it, rather than it just accruing value. So it could... I mean, I know it's sort of happening now, but could you see that becoming more mainstream? So it does become, it perhaps replaces the US dollar as the world's reserve currency.
Definitely. History of money always goes from being a collectible to a store of value to a medium of exchange and then a unit of account. Right now, Bitcoin is being heavily used as a store of value. And now Tesla also in their announcement said you can buy Tesla cars with Bitcoin. So now this is the beginning of Bitcoin as medium of exchange. And then in countries like Nigeria, where up to 30% of the country is already what we call hyper-Bitcoinization, it's becoming a unit of account. People think in Bitcoin. Everything is priced in Bitcoin. When you go to the grocery store, the prices are in Bitcoin and you pay in Bitcoin.
That is going to slow down the increase in value, though, isn't it? The moment it becomes a transactional currency rather than just an investment currency, you can't transact with something that is increasing in value so quickly. That's going to slow it down, surely.
Absolutely. And I think the increase in value will stop when it exceeds the price of gold. So we're talking about $450,000 for Bitcoin. You're going to start to see the rate of appreciation start to slow down. And as it heads toward higher levels, but not at the same rate, because it'll become a unit of account. You're exactly right, Phil.
Right, but it's still got a way to go. You're saying we still expect a great deal of increase in price, which is obviously why Elon Musk has seen the opportunity to get into it, why you're so keen on it. So if he is so right about that, and you're so right about that, why have we not seen a response yesterday from Tesla shareholders? I mean, why haven't we seen the Tesla share price is up a little over 1%, but the market's up generally? Why have we not seen the Tesla share price skyrocket yesterday on this news?
It's already skyrocketed at 1,500 times earnings, right? So, Tesla stock is a unique situation, and the way stocks trade is different than the way Bitcoin trades, right? So it's not an apples to apples comparison. So what happens in the world of Tesla stock trading is separate from what happens to Bitcoin. If you look at a more perfect example would be MicroStrategy, which is Michael Saylor's company. They put Bitcoin on the balance sheet, and now the price is up 400% in 6 months or so.
Right. But I mean, what did they do before they put Bitcoin on the balance sheet? What did they produce? What did that company make?
Software. So it's an enterprise software solution company that had a market cap of about $2 billion. And the CEO, Michael Saylor, he really did his due diligence. I've been into Bitcoin for 10 years. And when he came out and said he's buying Bitcoin, the reasons he gave were extraordinarily well researched. And he really knows what he's talking about. Last week, he hosted an event in Miami for 1,500 CEOs across America. And he opened the books and said, here's how the company bought Bitcoin. Here's how we did it. Here's how we store it. Here's how you can do it. So now all 1,500 companies are in the pipeline ready to buy Bitcoin. So Tesla is just the first now. Over the next several weeks, we're going to hear from more than 100 of corporations around the world who are going to announce that they've got Bitcoin on their balance sheet. And every single time that announcement comes through, the price is going to go up another 5 to 10%.
And what do you think it's going to do to the US dollar?
The US dollar is in a bubble, and the US dollar is technically worthless, like all fiat money. And the second that the balance of payments and trade and asset allocations start to walk away from the dollar is going to crash. You see that in the rise right now in the commodities market. Commodities are now rising in the secular bull market. That's terrible for the dollar. People are selling U.S. Treasury bonds. That's terrible for the dollar. I think at some point in 2021, the dollar is going to take a 50% hit. And as Bitcoin makes another 600% gain in 2021, and gold, which is also a beneficiary from a weaker dollar, it'll move up as well, but nowhere near the rate of Bitcoin.
Well, yeah, I think, universally the expectation is that the US dollar is going to go down this year, but 50%, that's quite a big call. You said it. We might hold you to it. Good to talk, Max.
Thanks, Bill.
Gee, he is pretty adamant, isn't he, that money has to have value through scarcity. That's what's all behind it. That's the Max Keiser view of the world. It's quite an old-fashioned view in many ways, isn't it, really? That printing money devalues it, which gets us back to the inflation concerns in the US right now. If they put $1.9 trillion of money into the economy through the fiscal stimulus package that Joe Biden has proposed, will that cause inflation? Well, we will find out this year, won't we? What I don't get, if you had any doubt, I heard Max talking about having $1 million of Bitcoin. He was moving it around. Don't know whether it's his or not. But if it was, wouldn't you cash it in right now? Wouldn't you just hedge your bets and take, maybe $250 million and buy yourself a very nice yacht and a big house? Phil at itsThe.business. If you'd like to send me a message, you can leave voice messages on the website as well. Just go and click on contact and you can do it that way. What are your thoughts on Bitcoin? In a way, it's almost the opposite, isn't it, of modern monetary theory. that says that we should keep on printing money till we reach full employment. Elon Musk is certainly sold on the idea of Bitcoin. I'd love your thoughts on what's driving it. Is it exactly to do with the expansion in the supply of fiat currencies like the US dollar in particular? That's it for today, this Tuesday morning. Back again tomorrow morning for another one. Thanks for listening.
It's the Business with Phil Dobby. Listen online at itsthe.business or wherever good podcasts are found.